Hi, Paul Heinze with Goldberg Heinze Business Advisors. It's a pleasure to have Arlene Martin with me today, based on months of people telling us in our firm about SBA, Small Business Association lending. Many people have heard about it, but not that many people know how to approach it. So we have a real pro, from Huntington Bank. Arlene Martin is Vice President, SBA Lending, USDA Commercial Lending with Huntington Bank, prominent, well-known national bank. Arlene, delighted to have you here.
Wonderful. Paul, thank you again so much for giving me the opportunity to share some valuable information this afternoon about SBA lending. I have been an SBA lender with Huntington Bank for the last 4 years and have well over 30 years of banking experience. So it is truly an honor to be here this afternoon and talk with you and the folks out there in the community. And a couple things about Huntington that I wanted to share with you is that Huntington is a national SBA lender. So we literally lend across the entire country. And we do so much volume that we have been ranked the #1 SBA lender for the last 10 years. So there's a lot of value for your clients as a result of all of that. And so I'm going to get started. We're going to do a little presentation this afternoon to share some information, and I will get going in just a second. So if all is well, you should be able to see my screen, and I think you can, right?
Yes,
Awesome.
indeed.
Oh, very, very nice. Okay, beautiful. So I'll be talking today about SBA lending the Huntington way, and I'll be sharing some of the basics about SBA lending. And I'm not going to read word for word what's out here. It's something that we can certainly provide later if there's interest. But the SBA loan program can be so incredibly valuable for businesses, business owners that are looking to scale, expand, and grow. And the reason that we're able to let banks like Huntington can lend to borrowers that perhaps don't have as much cash to put into a transaction, or they want to preserve their capital. So the advantages to an SBA loan program are indeed that. There's improved cash flow by offering longer amortizations, lower down payments. And the biggest point that I might cover is that the collateral that is required, we can accept a lesser than 1-to-1 collateral coverage. And one of the, how are we able to do that? Because an SBA guarantee is provided by the federal government at 75% on the 7A loans and 50% on the Express program. So a lot of different types of costs can be included, soft costs, etc. And people love it because there are no financial covenants. So these are kind of some of the key things that we talk about when we talk about SBA basics, right? Lending basics. So there's also eligibility rules that apply. And one of the things that you want to know as a borrower is who must provide a personal guarantee. And generally, it is anybody that has 20% or more ownership in the business. So if you have investors that come into your business and want to support you, so long as their percentage of ownership is less than 20%, they're not necessarily required to be guarantors. And that's important to know. A couple of other things that are really super important is that owner assets could be required to secure much larger deals, 350 and below, not as much. And then loans cannot be used to pay delinquent taxes. So that's one of the things that every so often we'll have a request like that, and unfortunately we're not able to accommodate. And then also typically the loans are provided to owner occupied real estate properties as well as for-profit entities. So those are the key factors to talk about with eligibility. Paul, did you have any questions at this point?
None other than the difference between the commercial bank and the SBA approach through you, for example. A couple of the key important differences and conveniences would have to be in the area of term payment as well as interest rates. Would you cover briefly the difference between commercial lending and the SBA approach?
Absolutely, my pleasure. So when we look at when a commercial banker reviews a loan request, they're typically looking at 3+ years of historical data that and looking for a project to cash flow based on 3 years of historical data. When we, and not all businesses, if we think about this pandemic that most businesses have ridden through and continue to be impacted by, we would say that 2020 was quite a year. And so conventional bankers would have challenges with all deals looking at positive cash flow in all 3 years, right? So when SBA comes into play, there's a higher level of flexibility to understand the differences. So for example, if 2019 was a strong year, 2020 was not due to pandemic related impacts, but 21 and 22 have gone very, very well, then we have the ability to make a loan that normally a conventional bank would not make. So from that perspective, from a cash flow analysis perspective, we're able to get more deals funded for our clients and our borrowers, right? Terms are more attractive. Generally on a conventional basis, we could be looking at a real estate loan that could be set up on a 5-year balloon with a 20 or a 25-year amortization. Under the SBA platform, that amortization could be fully amortizing out for 25 years. So that is really an extraordinary opportunity for borrowers to manage cash flow. And on the equipment side as well, the equipment side, conventional banks they're trying to mitigate risk, right? And so they're going to look at a 5-year term, whereas SBA might be looking at a 7 or a 10-year term. So great advantages there as well. Rates are a little bit better for sure on a conventional side, but then of course they're looking for more equity into the deal. When you talk about a commercial transaction, you might be talking about 20 or 30% cash equity. When you're looking at SBA, you may be talking 10%, and in some cases 0% equity. So clearly some very good positive differences but knowing the difference between both is really important as a business owner who wants to make really good educated choices on their financing options.
Good, thank you.
Beautiful. So when we look at a 7A program, we're talking about lending up, typically in my space, my loans are 350,000 up to 5 million under 7A, and these can be used. We actually lend up to $1 million for startups, and that often falls into the franchise space, which is really exciting for an early stage company to get up to $1 million in financing. Business acquisitions, 50 to 60% of what Huntington does is in the biz act side of the arena. I myself probably have 70% of my pipeline is focused on business acquisitions. And so we really do a fine job of funding those types of deals. Debt refinances is going to become very big as we move into the next year or two, and balance sheets are going to need to be consolidated. Commercial real estate, equipment, leasehold expansions, etc. All of those fall under the 7A platform. So there's just such a high level of flexibility there. And now if we look at the 504 loan program, that is typically reserved for large equipment purchases and for commercial real estate. And we're talking about a 50-40-10 split, bank holding 50%, the CDC or the SBA at 40 and the borrower at 10% equity. Again, an extraordinary opportunity to preserve capital and to acquire a piece of commercial real estate, owner occupied at 51% or greater, and looking at some long-term fixed rates interest. So good terms, great rate on that particular program, all super valuable for business owners that are looking to expand and grow, right?
Yes.
Now, any questions on that, Paul?
No, please proceed.
Awesome. Thank you so much. So then we have business acquisitions, and those are really an amazing opportunity for an existing business to expand in and buy into a new market, to buy out a competitor, things of that nature, to perhaps get into a new supply line that they've wanted to expand into. And also for that entrepreneur who's just left corporate America for whatever reason, and they want to buy a business. And I work with many clients that are looking to acquire a business, and they have their own set criteria as to what they need and what they're looking for. And so it's always a lot of fun to match make those types of those clients with business brokers like Paul, who does a phenomenal job of identifying business opportunities and to get those deals established. But our typical term is an amortization is up to 10 years. So that really provides a nice level of cash flow for the client, including that business debt that's being taken on. If we have real estate that's involved, we can look at a blended rate as well. So those terms could go out to anywhere from 18 to 25 years, just depending upon how much of that real estate is comprised in that business acquisition. So typically secured by business assets. Goodwill is absolutely permissible. We're going to always look for 10% cash equity, sometimes up to 20, and that might be in the form of a seller note. And it's really all predicated by cash flow. So as always, cash is king. And so that's something that we always look at. And so there's a lot of ways we can examine a deal. We're looking to provide the most favorable transaction or financing solution for our clients, but we're also looking at a rising rate environment. And when we perform our debt service analysis, we're looking at a higher interest rate stress test, and just being very mindful that we want to look out for clients and make sure that they get into a deal at the right, with cash flow being strong, with some reserves in place, 10% post liquidity, and then always a working capital line of credit to support that new acquisition. And also, when we can and when it makes sense, building in some term core working capital as well. Now, I have a feeling, Paul, you're going to have a few questions at this.
The viewer should be mindful of the fact that if it is a business owner already or reaching out to become a business owner for the first time, there are endless amounts of details and characteristics and things that have so much impact on the completed hopeful transaction, that having an expert like Arlene being a co-supporter of what you're trying to do can, in the briefest amount of time, assess exactly what you want to do, how you think you want to do it, and how they can help you achieve it. That's a big difference, rather than going through a mechanical mechanism that drags here and there seemingly forever and ever. That's my comment, which I think is critically important at this time.
Absolutely, 100%. And it's really important that the buyer understands of the business and what's available in terms of financing, term, structure, all of that kind of thing. So well said, Paul. Thank you so much. So when we look at acquisitions, we're looking for 100% of the ownership to be transferred. And sometimes buyers and sellers want to be a little bit creative, but that is part of the SBA guidelines that must occur. And then another key thing to note is the seller must typically exit the firm after 12 months. I will say that in some situations, sellers can be bring so much value to the transition for that new owner of the company in terms of relationships and vendor agreements and all sorts of things. And so it's good to have those conversations up front early and see what the ability is, and make sure that seller is aware of what those SBA requirements will be. It's very important.
Sure.
There are a comment, Paul, or a question at that point? Okay, very nice. And then we do have some strict limits on the post-closing adjustments, and that all of that just needs to be determined prior to closing, and potentially at least a week before. There's a whole process that's involved with review of purchase agreements and seller notes and all sorts of different documentation. And this is where I think that we at the bank at Huntington really shine, because we're always mindful of getting a hold of those documents as early as possible and making sure that we've had an opportunity to review them and that we provided some really solid feedback. So that's very, very important as well. And then one thing lastly, I'll comment on this particular slide is that we do order independent business valuations by a third party. And so that should bring that new buyer some comfort in knowing that this and really feeling good about the purchase. You know, there are situations where this valuation may come in a little light, and then there'll be further dialogue and conversations about how to proceed forward. So that's a really important validation process that all SBA lenders really must adhere to, or most at any rate, and we absolutely do. And then of course, if there's real estate involved, we order appraisals, and there's a whole process there as well. So any thoughts behind there, Paul?
Nothing other than what rattles around in my mind is very clearly this: the American dream is still alive, and the concerns or fears, apprehensions, or uncertainties that a business owner or about to be a business owner might have can be quickly mitigated by having a conversation with Arlene based on a recent real case that we worked on together. The people involved really were enhanced as to what they needed to do to get the loan, the paperwork, the documents, all of the other financial projections, everything else is conveyed in a, we suggest this, and this is how it's going to be, and we think that you can do this. It isn't a judgmental higher court of competent jurisdiction looking down at you until you become capable and keep coming back and coming back. The friendliness of the culture with Arlene in Huntington is something to really, really take seriously and consider.
Thank you so much, Paul. Much appreciated. So a little bit more about the acquisition side. Again, 10% equity is what we've been talking about. In some cases, when the borrower has only 5% and the seller is willing to provide 5% in a seller note, we'll absolutely consider that. And that may be a very viable option. Equity funds cannot be borrowed. If there is a home equity loan, though, that is being utilized for part of the equity and the guarantor has outside income, certainly very permissible. And then in some cases, gifts are given as an equity, as part of an equity injection, and we have documentation to support that as well. So there's a variety of ways that we want to work with you, because we'd love to see you have the opportunity to acquire that business, especially when it looks like it's a good fit, it's a good solid company, all of those things coming into play.
Okay.
So now I'm going to just jump over to startups, real estate, and equipment. I've talked about that a little bit before, just lightly. Startups are in business less than 2 years. We require business plans with 2 to 3 years of projections. There's the house and the spouse conversation as needed. It all depends. What I love about Huntington is there is, from the very beginning, when I first started, I met with the underwriting team in Columbus, and I would ask a question, and the answer was always, it depends. It wasn't a cut and dried fast no. It's not always a fast yes, but sometimes it is. If we have a really stellar deal, we have a really solid deal, it can be a very fast yes. But when there's, with SBA lending, I think you'd agree, Paul, that there are deals that come in that are not 100% perfect. And if they were, they would get done conventionally. So we have to work through, what does that look like? What are the risks? How do we mitigate the risks? How can we creatively craft a deal that the underwriting team is comfortable with and the borrower is happy with? And that is sometimes what the magic is with a bank like Huntington, where we know what the guidelines are, we know the parameters, and we want to create that great financial solution. So it's never, it's really a fast no, unless it's something that we just can't overcome. And there are a few things like that. But for the most part, I've worked with startup restaurants, and in time when that doesn't happen very much, restaurant acquisitions, things of that nature. There's just a whole variety of areas that we can look at. So, and I will say franchise lending is an amazing opportunity for that business owner who wants to, for an entrepreneur who wants to own their own business. There's a tried and true cookie cutter type of product out there with the franchises where they walk you through process. They give you training. They have everything laid out so well that it's a matter of picking and choosing which type would you like, what best meets your skills, your talents, your needs, and your lifestyle. So those are a few of the other areas that we work with. Any thoughts on this, Paul?
No, not at this time. I think what we need to find out from you is how can our viewers get in touch with you for more information, because every single case is different. There's a uniqueness to it, and getting in touch with you and getting the benefit of personal dialogue would be very, very helpful to them.
Of course. So Paul, I have my contact information up on the screen, and so anybody can reach me at 262-909-7899, and then my email address is arlene.martin@huntington.com. And so grateful for the time this afternoon, and I'm happy to provide this presentation to anybody who would have additional questions or just want to review it in a little more careful detail.
Yes, there's a lot of details in the presentation. I personally urge any viewer, regardless of where you are, contact Arlene to get the presentation so that you can study it. It's very, very true, and we go on the premise that fear, when mitigated and diluted, makes progress and a direction and an increased probability of success. If you want a taste of the American dream, if you are really interested in owning your own business, but have this unknown blockade in front of you as to, I simply don't have the money, how can this happen? Your first step, your best step, would be to contact Arlene. Arlene, thank you for taking the time to be with me today. I urge people to get in touch with you personally. I invite you to consider coming back perhaps in the fall and give us an update on SBA conditions, rates, and so forth then. All right?
My pleasure. I'd be happy to do so. Thanks again, Paul. And thanks to all you viewers out there. Have a great day, everybody.
And to all of you watching, thanks for listening, watching. Look forward to seeing you again next time. Paul Heinze, Goldberg Heinze Business Advisors. Bye for now.